Hi guys, how you doing? Today I'm bringing you news from Money Africa. What is Money Africa? Money Africa is a financial literacy platform that leverages on technology. We educate you about how to make money, how to grow money, and how to keep money. Now the thing is this, once you start making money is relatively easy. The hardest part is keeping money and growing it in the long run. So guys, what do you think we'll be talking about today? I want you to guess. As usual, just come into the comment section and guess. All right, I'm going to jump right into it. Today, we'll be talking about the 10 reasons why people lose money on the stock market. For those that are not familiar with the stock market, let me tell you how it works. So now let's say this, I'm an accountant and I have my own business. However, I want to invest and I do not want to invest actively. Let me explain what actively means. Actively means that I am going to a place every day and I'm making decisions. So for instance, look at Coca-Cola. It has a strong workforce there in almost all the countries, right? And people always say this, if you can find a Coca-Cola bottle somewhere, you know that, there's actually, the place exists. It's almost everywhere. So they go there every day. They think, oh, we're going to make this syrup. We're going to put it in a can. We're going to distribute it. We're going to do this marketing. That is an active business. People are going there every day. They're making decisions and it is active. Now, if I want to invest in Coca-Cola, Coca-Cola goes ahead and lists their company on the stock market where I can buy it, Shade can buy it, Lukman can buy it, Mohammed can buy it, Efe can buy it. Everybody from anywhere in the world that have access to the stock market where Coca-Cola is listed can actually buy it. And that's how the stock market works, right? Fantastic. So now a lot of people want to invest in the stock market and they start investing in the stock market. But the thing is that they're actually making 10 big mistakes, and we'll be talking about those mistakes today. The number one mistake that people make, and that's why they lose money, is that they do not understand the investment, right? Ask yourself, what does the company do? Everybody that is investing in a company should be able to explain in layman terms what that company is doing. So for instance, let's talk about Coca-Cola. Coca-Cola is a company that actually distributes beverages, right? They own a water line. They own a company that bottles water. They own snacks, yes. They own beverages. You need to be able to know what they do. Another question somebody is asking you is this: what is peculiar to Coca-Cola? So for instance, Coca-Cola is a dividend king. They've been paying dividend for the past 100 years. Many people know them as a dividend king. Is it a growth company or a dividend company? Coca-Cola is definitely a dividend stock. It's not a growth stock, right? Because it has been around the market for a while. The growth is not as sharp or as high of that of a growth company. You need to understand what you're investing in, right? Just being able to explain it in layman terms, what the business does. Is it a dividend stock or a growth stock? Some companies are actually both. What does their revenue look like? What is their dividend yield? Being able to answer this question, comparing their dividend yield to other players in the market. So I want to see how Coca-Cola compares to that of Pepsi. This is the kind of knowledge that you actually need before you invest in a company. So I understand the urge, I understand the urgency, I understand the passion that you just want to buy that stock. Somebody tweeted about it, somebody spoke about it on Instagram, but you need to actually do your own research to understand what exactly does it entail. And you need to be able to explain it simply, at least to a 6-year-old. What does this company do? Number two, they sell it at the wrong time. Now, remember that this year is not a great year. The S&P 500 is not doing well. For those that are watching this, today is the 14th of October, 2022, and the market has not been doing well, right? We're seeing a downturn, but remember that we're investing in the long run. When you look at the market in the decades, we're seeing that over the past decade, the market has grown by an average of 10% per annum, right? So when people panic and they sell quickly or they sell at the wrong time, they could make a loss. Let me give you a quick example. Let's say, for instance, somebody buys a stock at $50, right? Now the market is turbulent, different things are happening, or they even have an emergency. They don't have money elsewhere. They want to get that funds. What happens? They sell that same company, that same stock at $35. They end up losing $15 because they sold at the wrong time. Now, a lot of people make this mistake by doing what's selling at the wrong time. Number three, sometimes the mistakes that investors make that make them lose money, they invest with emotions, right? They can't explain it. I don't want to call names, There are some soccer players out there that have their football team, that they are listed on the stock market. I'm not going to call their name. And then they go ahead and buy the stock in that company because they love the game. They love the game. So they're not even doing the numbers. What does the revenue look like? What is their dividend yield? What is their cash flow like? Is it a healthy company? What is their future plans? They do not do any of that research. They just like the company and they go and buy it. That is a problem. So you don't let your emotions lead you, right? It's possible situations where as you actually really do like a brand and it's actually a great brand. Let's look at this, for example. Many people like Apple, but in actual fact, from a stock perspective, in terms of the quality of a company, Apple is actually a good investment, right? So that works out. But there are times when that emotion of saying, oh my gosh, I just like this brand or I just like this product might not actually be a good performing stock. So you need to be able to check that. Number 4, they want to break even. What does this mean? So they're just literally chasing the market, right? So this company goes up, this one goes down, and they're just basically looking for how to, just balance it out. I'm going to take the profit from this. I'm going to take that loss for that. There's no real direction. It is tiring. It is a lot of energy. You might not be going anywhere slowly. You understand? It just wastes. Who wants a situation whereas they are investing just to stay on the same level? It's a waste of my time. It's a waste of my money. I might as well put my money in a savings account and get some kind of return on it. It might not be a lot, but it's better than doing all that chasing to just be at the same spot. So that is not a good enough reason for you to actually invest. And you end up losing money because it's hard to time the market. It's hard to be able to say this up will offset this down and just basically trying to do all that gimmicks. It's a lot of work and you might end up not even getting it right. Now, number 5, they invest what they cannot afford to lose. Now, this gets really interesting or tricky in the sense that I don't think anybody in the true sense of it would actually invest something and lose it, right? Because many a time people are actually investing in the long run. I would rather frame it this way. They invest in such a way that they panic so much they get out quickly, right? So nobody wants a situation where as you want to invest what you would end up losing, because investment is done in such a way that you're investing in the long run and you want a return on it. So I don't think anyone should actually be investing because you are happy to lose it, right? Because if you want to lose any money, then maybe you want to lose just 5% of your entire portfolio, right? But if you're actually a proper long-term investor, you want to invest at least anywhere from 20% to 30% of your entire income, and nobody wants to lose that. So the question is this: in terms of they are not afraid about what to lose, that will work for high risk investment, right? Not particularly stocks, right? So you're thinking about for those that invest in things that are very high risk, you're saying to yourself, what if I lose it? What if I lose it? But if you're a long-term investor, you're definitely investing in such a way that you do not get. Data does not lie. I did not make up the stats. If you go and look back to all the decades that people have invested in the stock market, on average, right, you're seeing an upward growth. So you want to invest in such a way, and that's why we always push and advocate for ETFs, right? ETFs is done in such a way that if you invest in the long run, you're going to get returns. But if you invest in individual stocks, the truth is anything can happen. You could actually lose it, right? So if you do not want to lose money and you're not that much of a risk taker, why don't you gravitate towards ETFs? Because it then reduces your risk of actually losing money in the long run. Fantastic. Number 6, many people do not know what their time horizon is. They don't even know how long they're in the market for. So for instance, as of today, the 14th of October, 2022, the market is currently dipping, right? If any new investor was to come into the market, we would always say this. Number 1, if you're a short-term investor, stay in a cash position, right? Wait it out, stay. If you're a long-term investor, fantastic. You can start investing and buying in bits and buying in bits and buying in bits. So very, very important to know what level of, what is my time horizon, and that sort of helps you make a decision. If you don't know if you're a short-term investor or if you're a medium-term investor or if you're a long-term investor, it is very hard to make a decision about the markets. Number 8, they follow the herd. They do not have a mind of their own. I remember there was a time a very influential entrepreneur and also a billionaire was actually telling people to invest in a particular crypto coin, and a lot of people went ahead to buy. They did not do any research, they did not do anything, they just went ahead and they bought that coin. Many people follow the herd, and it's so, you probably be thinking they are stupid and they are dumb. That's not true. I'm talking about PhD holders, I'm talking about people that lead people, I'm talking about managers, I'm talking about smart students in universities. Yes, so people that actually, I'm talking about hedge fund managers, yes. So people think that, maybe when they get older or maybe when they have more responsibility, they would not fall a victim to herd. When in actual fact, more adults, yes, actually fall victim to that whole herd thing than we think about younger or younger people, right? So you actually have to ask yourself, why am I doing this? Am I doing this to follow the herd? Or am I doing this because, I've made a sound decision about it and it also happens to be what the herd is doing. So I'm not doing it because the herd is doing it. I'm doing it because it makes sense to me. Very, very, very important conversation. Now, the ninth one is that they chase performance, right? So people are always looking for the next best thing. So what is currently performing, then they want to quickly, put their stake on it. They're always just chasing, and that in itself is not a bad thing, right? If you look at investors usually double on their best performer. So in the sense that, let's say, for instance, they invested in a particular stock, that stock is doing really well, they increase their investment in it. However, if you have a strategy of just literally always going out to find something that is running, something that is currently doing very well to quickly put money on it, you don't have a real strategy, there's a chance that you will lose money. Why is this? There are some times that a particular stock has gotten to a point that it will most likely fall because that race or that bull run is because of perception or because of a lot of things are chasing. So that is not its true or its real value. Because that happens a lot, if you have a always chasing performance, you might end up grabbing stocks that is high because many people are chasing it, as opposed to the fact that that is the true value of that stock. If that is the case, eventually it's going to drop and you will lose money. So don't just say, oh, what is everybody chasing right now, and then I'm just going to buy it. I'm looking for a performer, I'm just going to buy it. You might end up getting a performer that is overpriced. The last but not the least, they are impatient. The biggest asset of any investor is patience, right? Patience is key. Many a time you just really have to just invest and take your hands off and let the market do its work. Just do it consistently. I like to liken my investment to buying groceries. Every month I'm going to eat. So I go ahead every month, I buy food, I put it in my fridge, I put it in my belly. The next month I buy food, I put it in the fridge, I put it in my belly. Treat your investment the same way. Just continue to invest in the long run and be patient. Be patient, be patient, be patient. It's so funny how every time we speak about investing, it is more about behavior as opposed to the knowledge. Your behavior is actually what determines things. So the earlier you can start practicing diligence, start practicing, delayed gratification, start waiting, the more benefit you're going to derive from that outcome. So guys, I hope you enjoyed this session, and I want you to come into this comment section. What did you learn here? Can you give me at least 3 examples of why people lose money in the stock market? I told you about 10. I want to hear at least 3 from you. Now, if you're looking at our video for the very first time, you're joining this platform, click here to subscribe. Click now and tell other people about it. Share it in your groups, share with your friends, let more people know of 10 reasons why people actually lose money on the stock market. Thank you.